us this morning, Associate VP, Group Leader, Equity Advisory Group at Motilal Oswal Financial Services. Rahul, let me take that conversation forward with regard to a Reliance. So the heavyweights did well yesterday, both HDFC and Reliance. Let me talk about Reliance first. We've seen a decent rally in the stock, of course, from the lows of the year. Do you believe that that is justified, and what next for a Reliance Industries?
So I think, as you rightly mentioned, I think what we've been seeing in the markets, I think, is the large cap stocks performing very well since last 3-4 months. And maybe if we notice, I think this rally is more skewed to the large caps. And obviously, fundamentally, if we look at, there was a valuation gap between the small and the mid versus the large cap. So large cap were trading at a discount to a lot of last 10-year averages and all. So my sense, I think, still room for the large cap plays. Coming back to Reliance, I think obviously Reliance was trading, obviously had corrected from the recent highs, plus the valuations looks attractive, all the businesses put together. So I feel that this rally will still continue. And we believe that I think there could be another 12 to 15% upside in Reliance from current levels.
Okay. What we'll do is we'll
the market yesterday. Reliance, Bharti, HDFC Bank. It's the safe names which did see a flight too, as opposed to some of the growth stories in the markets like an M&M, etc. What is it that you're making of the psychology in the market right now?
So I think, as I discussed earlier also, what we feel is, I think, what market is chasing is, I think, the valuation and safety. I think a lot of uncertainties in last 1 year, what we've seen, global uncertainties and all. And we've seen the markets been very, very volatile. Secondly, I think with the valuations for the mid caps and the smalls, we had a spectacular rally in last 2-3 years. I think so that's going to take a breather. Obviously, the valuations were stretched, and I think they are still just gathering the things. So I feel that value in the large caps, so there was a shift from the small and mid to large. And I think the numbers delivered by most of the large companies, I think, far and large were good. So I think last quarter, this quarter, maybe. So if we look at it, so I think the numbers perspective, what the markets have been following. Secondly, I think if we look at the large names, as you mentioned, I think where the markets are looking like, the safe haven kind of a stuff. Like, so if you look at HDFC Bank, which has underperformed for 3-4 years, and I think this year we saw kind of a performance. Obviously, the valuations were quite attractive at the level. So at some point of time, most of the stocks where the valuation remains attractive, it tends to be, the stocks tend to perform. So followed by all the private large banks like Kotak's of the world, Axis, ICICI, all of them have performed, state banks. So I think what we are seeing is the rally in most of the large cap names and the heavyweights. So if you look at Reliance again, which we discussed again at an inflection point, the stock did well since last 3-4 years again. Bharti, I think what we see, I think that stock has performed continuously since the last 3 years, year on year, every year. I think obviously the numbers and the telecom sectors have been very, very strong. After a long time, last 2 quarters of bumper results from Bharti as well as the entire telecom sector, from a loss to a profit, what we saw in most of the companies. So I think what markets are chasing, the large caps, safe, and where the valuations are fixed. So I think still, I think the second half of the earnings, what we believe should be much, much better. So from what we did from the first half. So I think the large names will still continue to do well next half as well.
M&M, that's going to be the other stock which is going to be in focus, especially after the investor day takeaways yesterday. They're targeting a 15 to 40% CAGR across segments in FY 26 to 30. They're aiming for 8x SUV as well as LCV revenue and 3x farm revenue growth over FY 20 to 30 as well. The tractor industry CAGR, that's been raised to now 9% from the earlier 7%, and they're expanding beyond insurance when it comes to their financial market presence, or rather a BFSI presence. They've talked about 6 growth gems which are targeted to reach about $2 billion in value by 2030. What are the brokerages saying them this morning? Continue to remain overweight, in fact, up their targets. Morgan Stanley now foresees a level of 4,400 on an M&M. But having said that, Kunal, for now, you think names like M&M could perhaps go in a bit of a consolidation patch because the news is very well baked into the price at this juncture.
Yeah, that's exactly the point, Aisha. So, we all know that the news is getting in sync with the price movement. The prices have moved phenomenally high, for M&M over the last many weeks and months consistently. In fact, this is the 6th or the 7th consecutive month, if I'm not wrong, or 6 out of 7 consecutive months where the stock has done reasonably well and showing positive closing for itself. So there comes a point where the stock gets into a zone where things are a little bit overstretched, overbought on the indicators. Also, I think we are seeing that happening for M&M. That's why I would believe that the stock should ideally consolidate. I'm not expecting a very, very sharp reversal into the stock price, but even if it consolidates over here, say 35, 3,700 for another couple of months, that I believe could be a positive sign because that gives a breather for the stock in terms of indicators to cool off on the monthly and the weekly charts, and then the stock probably trying to find its mojo back. So I think in that sense, I would expect the stock to consolidate.
And what about M&M Finance, Kunal? Because that stock flew yesterday 5% higher. Nothing materially different, viewers, from a commentary perspective, but just the fact that they are looking for an aspirational ROA of 2.2 to 2.5%. I'm not sure whether that's a bit of a stretch or not. I will ask Rahul on his view on that one. But first on charts, 5%.
This is a fresh breakout for M&M Finance. 340.41 is a lifetime high for the stock price, and something which the stock, I think, had over the last 2 years, 2023 full year, 24 and 25 good part in the stock was underperformer, 300 to broadly 250 as a range. So a volatile 20% band for the last 2 years. The stock has finally given a breakout of sorts over here. So this could probably be a very strong indicator that we are looking at a reset of a trend and something which has not happened for the stock in the last couple of years. And I think we are in that zone where many of these stocks, like for example, Asian Paints we were discussing, M&M Finance, many of these stocks are coming out of their hibernation period. Eicher Motors on the auto pack, Maruti, these were not the erstwhile leaders from the entire respective sectors, and I think that's where I would believe that the market texture has changed and you're seeing new leaders emerging. That's why it makes sense to ride on to these new leaders or new breakouts.
What about you, Rahul? Where do you sit with regard to the M&M Finance commentary as well as the performance?
I think what we hear, and what we believe, I think M&M Finance trades at 1.8 times price to book for FY27 and and it trades at 14 times earnings FY27. I think growth what we see and what the management has guided, the 19% top line growth. So I think there could be a modest 15-16% upside from here vis-a-vis other NBFC names. So I think looks okay, pretty okay. So as the markets also where the focus is more of safety and all. So I think one can look at for the modest 15-16% kind of growth in M&M Finance.
Okay, that's the take coming in right now on M&M Finance. In the meantime, just looking at the market texture, and Kunal, to the point that you were making, that it was the mid-cap end, which wasn't all as excited as what the large caps were doing, which were focused on, just taking that all-time high. What is the sense that you're getting about the names that fell within the mid-caps? Because, like you said, there was not that broad-based cheer, even though we were a whisker away from all-time high.
The last 4 days or 5 days, or maybe if you look at it cumulatively over the last 10-15 days, there have been hardly 2 or 3 days when the net market breadth, advances minus decline, is positive. Yesterday it was almost 300 negative. 2 days back it was 1200 negative for the index. So we are not in that zone where the market breadth is supportive. One off day you get that 200 point rally, 300 point rally for the Nifty, and you see the net market breadth positive. But that's what I was indicating, that it's not been a rosy market for the entire mid cap end, where you've seen most of the stocks flying, coming back to new highs. It's more like a stop and go, because you see a couple of days the stock rallying up 8-10%, but then the immediate next 1 week there is absolutely no follow through for those kind of stocks. So you either buy it at the peak of momentum and then you are left to wait out for the stocks to hold on to these stocks for a week or so before there is another round of breakout, or you wait for that breakout to happen and then you buy these stocks in the anticipation when these stocks are going through a correction. So that tells you that the markets are not into that high frequency, very strong momentum breakout, and that's why I would believe that the mid caps are lagging behind.
Kunal, AWL agree. There's a block deal expected from Adani Group It's a clean out trade, by the way, at 275 rupees. It's currently trading at 276 odd. Do you think that this there was an overhang of this, liquidity coming in? Now that goes away. Is there a chart for that? I mean, how is it looking?
Nothing exciting, Sajid, because I think the stock in 2022 made a high of 840, and consistently, quarter after quarter, the stock has been dropping down. Volumes have ebbed off for AWL, and the stock is now, I think the recent low for the stock, which the stock made a low at the start of this year, was around 225 or 230 levels for Adan Wilmer. So I think in that sense, I would expect the stock to consolidate more. And these are the kind of stocks which you ideally avoid, because you are at a point of the market where there are new breakouts which are happening. I was just indicating M&M Finance, iShares, etc. So it's better to concentrate there. Let these stocks complete their phase of correction, time consolidation. Let them, rally 10-15%. Volumes come back. Then you try and participate. You don't have to be first in terms of jumping into these stocks buying.
Yeah, makes sense. And it's such a broad market. Why pick out all these names? With Morgan Stanley, they've hiked the target prices for Prestige Estates as well as IGL. Ashesha is here with details from that note. Ashesha?
Well, yes, based on the second quarter results, Morgan Stanley has gone ahead and raised target price for two companies. One is Prestige Estates and the other is Indraprastha Gas. And first up, let's talk about Prestige Estates, where they are maintaining their overweight stance on this stock, but they've gone ahead and increased the target price to 2,000 versus 1,900 rupees per share earlier. Now, Morgan Stanley says that they are increasing their FY26 pre-sales guidance to 27,000 crore for the full year FY26 versus 26,000 earlier, implying nearly 60% growth on a year-on-year basis. As far as their margin assumptions are concerned, that now stands at 35% for the full year FY26. This is based on the 38% margin that they reported in the first half of this year. So very positive report that has come in on Prestige Estates from Morgan Stanley. They've raised the target price to 2,000 and they are maintaining their overweight stance. The second one is Indraprastha Gas, where they are maintaining equal weight. Target price earlier was 192. They have revised it to 202. They are lowering their volume estimates on account of muted volume growth that the company had reported in the first half of the year. But they are maintaining their margin assumption at 5.7 rupees per SCM, and they are revising their capex estimates. So for the period FY26 to FY30, their capex estimates has now been revised from 7,600 crores to 6,900 crores. But all in all, they've raised their target price to 202 from 192 earlier. So both these stocks, Indraprastha Gas and Prestige Estates, in focus on the back of this MS report.
Okay. Thank you so much for that, Ashesha. And another stock which has been on our radar since the last couple of days is Shriram Finance. Has outperformed the benchmarks over the last 1 year or so. What's driving the growth and how stable is the asset quality? Mithali joins us to analyze all of these numbers. Mithali, what do you have for us?
Rightly said, and Shriram Finance has for sure significantly outperformed almost all the benchmarks, and year to date the stock is up 42%. Also in last 1 year the stock has surged around 45% and has beaten the benchmarks. Since October 1st also, if you see, the stock has gained 27% in less than 2 months. Now, what are the growth drivers behind this momentum that we see? The company is seeing stronger growth momentum across its lending sectors. A supportive macro environment is also aiding to this support, and also the asset quality is stable and is set to improve, which is also boosting the investor confidence. Now you talk about the profitability, it remains healthy and is supported by consistent ROA delivery by the company. And finally, talking about the valuations, they are quite reasonable if you compare it with the peers, which might have also drawn the institutional interest. Now the management has guided for 16 to 17% of AUM growth for FY26, and so far the performance is tracking well. For quarter 2 FY26 and quarter 1, we saw that the growth was in the range of 15 to 16%, and also disbursements were up around 10% year-on-year basis. Now if we see the look at the asset quality, it remains stable with a clear improving trend. GNPA for the quarter 2 FY26 stood at 4.57%, while the NNPA stood at 2.49%, and clearly showing a sign of stable movement. If you see the quarter 2 and quarter 3 levels, that was elevated levels from there, and it has set to improve from now on. Talking about the margins that are an important monitorable going forward, and management had guided for the NIM improvement as the access liquidity normalizes. However, the improvement was quite delayed in Q2 because the high liquidity buffers persisted longer than expected. Also, the incremental cost of funds also stayed elevated at 8.07%, putting the temporary pressure on yields. Now, talking about the return on assets, the management has guided the performance band above 3%, but for Q2 FY26, we saw that the ROA came in at around 2.89%, slightly lower than 3.06% seen last year. Talking about the valuations, in terms of valuation, the 1 year forward book value has risen from 1.8x 6 months ago to 2.18x currently. Now, this is above the company's 5-year average of 1.7x, indicating the re-rating driven by stronger fundamental and the sentiments. Also, we have been hearing on the street about the MUFG deal, a key recent trigger that has been in the news around the potential strategic investment. So, MUFG is reportedly in advanced talk to buy a 20% stake in Shriram Finance, and the deal is valued around 30,000 odd crores. So, the management has also acknowledged that some discussions are ongoing, adding to the positive sentiments about the stock. Now we have a look at the brokerage view. So consensus recommendations remain overwhelmingly positive, and 34 analysts have given a buy rating with 4 recommending hold, and only 1 has a sell call. So concluding, overall, the Shriram Finance has given outperformance throughout the year, and these were some of the growth drivers behind this outperformance.
Thank you so much, Mitali, for that very sharp outperformance from Shriram Finance. That we've seen 45% year to date or rather over the last 1 year, and 42% year to date. Rank outperformer in terms of the way it's behaved. On charts, Kunal, Shriram?
Yeah, I think it's been looking very charged up, extremely strong. The moment that I think the stock had crossed 775 odd levels, which was a flag pattern breakout for Shriram Finance, the stock has gained at least another 7-8% higher in a matter of, I think, a week or so for itself. So it's been one of the strong names, performing stock on the short to medium term charts, continues to look attractive. The best part about the stock for Shriram Finance so far is that the stock has not shown any major kind of volatility, and it's been more trending stock. So, even if you buy the stock, for example, at a slight peak in terms of momentum, the stock doesn't go into a sharp corrective phase and tries to just about goes into a couple of days of time consolidation before it heads into a breakout.
Grow, that's going to be on our radars after the kind of fall that the stock has seen. Today, by the way, it's going to be reporting its numbers as well. So it's going to be quite critical to see whether the fall in the stock gets stalled at all or not. It's been quite a choppy ride ever since its listing. Other than that, of course, Reliance, the notification last evening, the fact that they've halted the Russian crude imports at the SEZ refinery ahead of curbs coming in. TCS, which is looking to now secure a $1 billion investment from TPG to accelerate their AI data center business, Hypervolt. So that's the other stock. Kotak Bank, that board meet for the stock split is dated today. There's Godrej Properties, of course, which has crossed the FY26 development guidance already with that 75-acre land acquisition in Nagpur, wherein the project GVA stands at 755 odd crore rupees. So that's the one clutch of names that we're keeping on our radar this morning. And then, of course, there are other names like M&M, of course, which we've discussed. Brokerages are very, very positive and upbeat after what we heard from the analyst day takeaways. But that said, Rahul, just wanted to analyze, where is it that you have a concentrated buy, if at all, within sectors or any of the mid-caps, where you think if the market or should the market fall, you would be a buyer or recommend buying into?
So I think 2-3 things. I think one is obviously we've been quite bullish on the financials as a space, and I think the numbers, most of the large private banks reported a strong set of numbers, and I think we have seen the same in the reflection in the kind of stocks outperformance versus Nifty. So we feel that I think obviously the large private banks will continue to do well, and I think as I discussed earlier, the second half would be much better for all the banks. So I think starting with HDFC Bank will being the top pick, followed by ICICI and SBI. So, and the theme remains that I think all large banks will continue to do well. I think we've seen the kind of volatility in last 2-3 years, irrespective of the markets, but I think the balance sheet remains tend to become more and more stronger for all these private banks. So I think that's one of the area what we've been liking. Second, I think we've seen reasonably good setup in metals. I think this quarter numbers were decent. I think so both for Hindalco as well as CSW Steel, both the numbers were pretty strong. So I think this remains strong. Thirdly, I think one theme remains top is I think telecom. So I think Bharti continues to attract investors' attentions. So I think if you look at month over month or a quarter over quarter, the stock performance continues to be strong. So I think we believe that I think still the management's guidance and kind of to take what they have, I think Bharti will also continue to do well. So I think there are the few names in the large space what we continue to like.
Rahul, if you can, also take us through TCS. They've already secured an, investment for their data centers. Is that a model that you see other IT companies also looking at?
So if I talk about the entire technology company as a sector's earnings, what they reported this quarter, I think the earnings were pretty in line with what the street was estimating or slightly better, I would say. Coming back to the entire sector, I think the major concerns remain for the most of the IT companies, the demand coming back from the investor side in terms of in the most of the companies. So mid cap and small cap in IT space, they have done much better. And I think obviously, the recent correction also in those stocks augurs well. But coming back to TCS, I think the large names, TCS, Infosys, HCL, all three of them. I think TCS, I agree with you in terms of the kind of shift that what they have been talking about, and the valuation remains attractive at this level. So I think risk versus reward favorable for the large IT companies like TCS, HCL Tech. So I think one can look at for the investment per se in these companies.
Okay, so this is of course the development of today, where we have a private equity investor coming in and participating in that huge